Hello, hello. It's another good day ahead of us for US CPI.
Brazil's central bank's Galípolo says Brazil may be less impacted by tariffs.
Check that out. Very, very nice expectations set. Look at that. It's almost like these indicators can help set expectations or something. So this is the bar we set the expectations on.
1 minute now until we expect the release of the OPEC monthly report.
Oh, that's right. We are getting OPEC. Here's the calendar. So here's all the US CPI data coming out in about 15 minutes. And you can see OPEC is not on this calendar. You have to go to Financial Juice. And if we stretch this out a little bit, here we go, OPEC monthly report. We'll be getting the headlines out of this, but we had some breaking news with Trump saying, hey, interest rates should be lower, and then you can see market tanked and immediately recovered off that. And it's over at Financial Juice talk with us. Let me know. Hey, Harold. Guys, let me know if there's any charts you want me to go over. I've been programming the last 6 hours now, so I could use some help.
OPEC monthly report here. So OPEC leaves 2025 global oil demand growth forecast unchanged, 1.45 million barrels per day. For 2026, they leave that global oil demand growth forecast unchanged as well, 1.43 million. They leave their 2025 economic growth forecast unchanged, say that potential tariffs are not expected to materially impact underlying growth assumptions.
Here, we're gonna put this on hold at the moment because we want to wait till maybe 10 minutes.
Voice news disconnected.
Yeah, we want to wait till about maybe 10 minutes away. So, yeah, man, I've been doing some good programming. You know, I was just talking with a guy last week, I believe, and we were walking through some code together, and I was saying, hey, there's this one thing that you have to double check whenever you're trying to figure out if a feature is breaking or not in your indicator. And I walked him through it about a week ago. And as I'm working on my code today, I'm like, I wonder why this isn't working. And then I go ahead and I try that little trick, and it immediately starts working. And I'm like, oh my God, I've already spent an hour and a half trying to fix this in 10 other ways and validating that this isn't a problem in other indicators, da-da-da-da-da. But, when you're working with a large indicator, and this is an update for the probability pivot points that I'm currently working on, to add alerts and update it to the latest version of PineScript. Also, check this out. If we look at the range bullish odds, we don't need the strategy dashboard here at the moment. I don't get me wrong, the strategy dashboard is really, really helpful when it comes down to figuring out which pivot point bias to use. So, here's all the pivot point biases. You look at the strategy dashboard and it'll tell you the win-loss, seasonal win-loss historical ratios for all these strategies. But for me, I can just look at this data and say, oh, wow, there's a lot of closes up here, right? 31 plus 21, 52. So 52% of the time for the month of February, dollar yen closes between the central monthly pivot and the R1 weekly. That's actually the weekly pivots, not monthly, because we have this dash 1W next to there. So for this particular week, 50% of the time, the closes are in between these two pivots, seasonal. And I think that's pretty useful information, but I didn't even draw this up arrow thinking that. So you can look at price now and be like, oh, wow, we're probably going to end up in that same spot. But I was looking at this stuff, which is non-seasonal data with range probability. So, I try to skew from using technical indicators. Don't get me wrong, I have a few. I have this one called Boss Bands. This is free. So I have indicators that are still technical, but over time, as I've learned more and more, I've moved from technical indicators to statistical indicators. Some people would say it's algorithmic. Some people would say it's quant. There's constant fighting about what's quantitative trading and what's not, and what's algorithmic trading and what's not. It's like I'm just using statistics to determine my analysis as like the majority of it, outside of reading outlooks from institutions, getting the views of other traders on their expectations, and then updating myself on political happenings. And speaking of which, we got a pretty big happening coming out here for CPI. This isn't going to be a do or die CPI, frankly. I mean, unless the CPI comes in significantly higher. And from what I know, that could be the case, depending on how the fires in LA are moving home prices and whatnot, but it doesn't seem like it's moved home prices all that much. And even then, if there is a spike here because of, the California fire, I don't even think that'd be a case. It would be transitory, so and same thing with the tariffs, right? A big call over the last couple of months, especially since Trump has been inaugurated, since like the end of December, a lot of analysts have said, hey, we can probably determine inflation's going to be transitory. Even people at the Fed. There's been commentary from voting members of the FOMC saying exactly that. Oh, we have to wait and see and look at the data and make sure that it's not fucking transitory, right? Let's see here. Harold, yeah, sorry, I'm not paying attention. So I'll check out USD CAD here. I use Oanda, so I'm going to check out the Oanda chart. And also I'm going to turn we're getting pretty close to the release here.
So looking at a note from Credit Agricole here, for CPI, they expect the headline metric to rise spot 3% month over month, slightly down from the spot 4% in December. The year-over-year rate they see holding steady at 2.9%, though our forecasts are not too far from rounding up to 3%. Credit Agricole also expect core CPI to rise 0.3% month over month, ticking back up after slowing to 0.2% month over month last month, which could result in unchanged year-over-year rates of 3.2%, in line with median estimates, though in the case they see some rounding down to
voice news disconnected.
I just wanted to say, hey, we already did research on this a few days ago. So we had all these forecasts for CPI come out, and they're here in the economics channel on the Plan the Profit Discord. Link to that's in the description. Most of you guys watching are already here, but you can just go to that channel, the economics channel here, right? Economics under research, and you'll be able to find this image. It's only going to be useful for like the next 5 or so minutes. So, but you can see all the individual forecasts. Just look at the median, and you can see, okay, compared to the prior month, which is this little subsection, way here, right? Previous month median forecast. Outside of this column here, what is this? This is the core CPI. I believe that's month over month. Yeah, so outside of core CPI month over month, everything's expected to come in flat or lower. So let's just focus then, I guess, on the headline CPI. If the headline CPI comes in at like 0.35, right? and the year over year comes in at 3.1, probably going to make the Fed give more hawkish commentary, which would make the dollar appreciate. So if it comes in at 3, probably not the end of the world. If it comes in at 3.1, the year over year number, it's going to upset people and the dollar's probably going to get a bit strong. If it comes in flat or even a little lower, we're going to probably see some risk on from here. And it seems like short term, at least on USD CAD, the yield spreads are moving into some pretty negative territory. So this tells me that bond yield spreads are moving, at least intermediate. Yeah, short term over the last couple of days and the last 7 days net, it's been negative on the yield spreads. So, I don't know, let's check out some targets. Wow, there's pretty much nothing down there. We got to probably go and pull up weekly targets then. Let's go to a 6 hour. Timing dots. Yeah. So maybe here. I see a clump of dots there. Or down here. These look like the two most likely spots. Either way, it seems like first exit would be around here. Call it 142.50, and then the second exit would be around here, eyeballing it, around 142 flat. So those would be the two spots I target on short exits, and so that would be in flat CPI comes in maybe below expectations. On a higher CPI, it's a little more straightforward up here. That looks pretty straightforward. 144.2. So there's kind of side, right? That's 100 pips compared to. I hate this, man. This trying to do the draw thing. So that's 60 pips in maybe a flat move, right? US CPI comes in flats, maybe 60 pips ish to the downside, and then that's it for the rest of the week. But if it surprises more, you're getting about the same as this upside move, which is about 110 ish pips. And I think that's a not so unreasonable expectation. And maybe we'll do another stream later this week and see how those expectations hold up, how that analysis holds up for USD CAD. Hopefully that was helpful for you, Harold. Let's go now and watch US CPI because we're getting pretty close here. So I'm going to leave Financial Juice on now. I'm actually going to refresh this page, launch it one more time. And I usually would keep the music turned on, but we want to make sure we hear the squawk chat. So no music for a little bit.
Seek to find a way to implement the Gaza ceasefire deal that prevents new escalations.
That was weird. Well, Harold, hopefully that analysis was. So I'm still eating some oatmeal here. But yeah, let me know if that actually was helpful or not. I mean, the next best thing would be, for example, saying, oh, in a bullish scenario, if you're already short and you get a year-over-year headline CPI above 3%, and you do go up here, at what price, right? At what threshold price do you get out and put the stop at? That's something that requires some more historical statistics on how CPI moves, to what kind of surprise you have, and how that relates to what the expectations and the current policy is at the FOMC versus, essentially what's the reaction function at the Fed will determine the reaction function of the market to inflation. And figuring out how to model that to get an idea of what kind of expected value move you could realistically get from various prints is a very good study, but it requires a bit of data.
1 minute remaining. I'll be leading with US CPI year over year.
Data that's not necessarily in TradingView. You have to like hard code it, and even then it's you're better off using Python or a real programming language to model that stuff out. Anyways, let's go ahead and put this guy over here. Put this guy over here.
10 seconds.
Ooh.
3%, higher than forecast 2.9%. Month over month, 0.5%, 0.5%, higher than forecast 0.3%. Core CPI year over year at 3.3%, 3.3%, higher than forecast 3.1%. Core month over month, 0.4%, 0.4%, higher than forecast 0.3%. Look into the markets here, a bit of whipsawing in the S&P, strength coming through in the dollar, now some weakness coming through in the S&P 500. So again, CPI numbers here broadly coming in hotter than expected. That headline month over month at 0.5% on expectations of 0.3%. Again, S&P 500 seeing some weakness, dollar seeing some strength here. Treasury yields jumping after that inflation data. The 10-year yields last up around 6.1 basis points.
All right, I think we're gonna go with the
keep
plan
in mind,
here.
we are still waiting on the super core CPI calculations to come through as well.
Not the craziest move, honestly. Yeah, you can see all the yield spreads are moving a bit more positively now.
Traders pricing in less Fed easing after the CPI reports. Again, traders pricing less Fed easing after the CPI report.
Yeah, we'll check out what the pricing is. Yeah.
Europe stock 600 falls sharply as well after the negative US CPI figures. Last down spot 3%. Treasury 2-year yield spiking. Last up 8.8 basis points.
I mean, it makes sense, in my opinion, to be long this.
Dollar yen's up 1.2%. Euro down spot 3% against the dollar as well. Cable down spot 5%.
Yeah, you can see all the short-term yield spreads are turning positive. I'd probably want to stay long from here at this point. Let's see here. Let's check out trading economics real quick. Sorry for the visual flashbang here. Let's see here. This week, I mean, we already had CPI.
10-year yield curve, little changed after inflation data. Last at 24.1 basis points.
Summary of deliberations is tomorrow for Canada. PPI comes out Thursday. Some moderate data, retail sales. Yeah, at least for the rest of this week, I would stay long the dollar. And then going into next week, you got RBA decision. It's probably going to come in dovish. It seems like maybe AUD USD might be the better short play, honestly. Yeah, check that
We're seeing
out.
the release of the US Supercore CPI calculations now as well, month over month at 0.757% from the prior 0.21%, while the Supercore CPI year over year at 4.017% from the prior.
Voice news disconnected.
Okay, I see two clusters. So given the current high, the following lows are around here, which line up with our clusters. I would stay short Aussie dollar, and then, I mean, don't get me wrong, you could just end up doing something like this. But given the amount of time left, you'd have to go like this, effectively. But, you know, you risk this, or you risk this. Like, there's a decent chance of this going lower, but I would not bet incredibly heavily on a short here. Just simply due to the fact that this thing could rebound going into the RBA meeting and then lower. Actually, now would be a real good time to check out next week's odds here. Sorry for the screen jittering. We're gonna delete those drawings real quick. Gonna go to a 12-hour probability pivots. Where do we mostly top out? Ooh, a lot of closes around here. Okay. And I'm guessing there's a really flat, long bottom side. No, wow. So actually, that's kind of pretty well skewed. That's a lot of lows between S0.5 and S1, yeah. There you go. So definitely range bound next week. Like, unless you get something super crazy out of the RBA. But considering we're expecting more dovish commentary out of the RBA, yeah, it really seems like shorts above R1 are like really nice next week. I'd put an alert at R1 once we find out where this thing settles, because you can see that this price updates in real time until the close of the period. So I'd put an alert at R1 for next week on Aussie dollar. That sounds like a good idea to me for something to put on my watch list. See what a little bit of, oh, let me check out my economic calendar does. Right? It's like, oh, we're looking at CAD. Well, let's go ahead and and then you have Canadian inflation coming out Tuesday. Okay, so so we're back here. Whoa, that's like 90, 85-ish% of tops for this week come in above our 0.5. That's pretty high. I think this is because we have this volatility from the tariff stuff last week. So I don't think we'll actually hit that unless we get more tariff news. But going into next week, around Tuesday, we're getting CPI. So if Canadian CPI comes in lower, we should be seeing like S2. Yeah. Yeah. You can see how this is skewed lower, how the lows are skewed like this. And then if I look at the high data here, the highs look like this. So you can see it's more clustered, there's more spread out stuff over here. So it's like, okay, either you hit a high and then you come down, or maybe along the lines of you come down and then you rally all the way up, or you only rally up to about here. It seems like this is pretty consistent for people who are bullish on seasonality or looking for exits on USD CAD. This looks pretty good consistent odds here. These yield spreads are turning quite positive now, short term, huh? Yeah, as these yield spreads turn more positive, I would like to stay bullish on this. Generally speaking, trading against yield spreads is not a smart idea. A lot of institutions use yield spreads to indicate what their position on various FX assets should be. Don't get me wrong, there's a correlation between the performance of yield spreads and the actual price, and taking that correlation into account is important. Hopefully we can get that into the indicator soon enough. Dollar Swissy. Sorry, I'm not checking the chat all too much. Dollar Swissy. Yeah, this makes sense. This makes sense. Oh wow, that looks like we're gonna get a pretty nice continuation. Pretty fat lows. Pretty wide lows. Do we have something going on next week for Switzerland? Do we? No? Let me double check that I have countries. Oh, Switzerland. I don't need these guys here. Oh, did this reset? Yeah, this reset. I fucking hate when it resets. I don't need all these other countries. I just need the G countries. Okay, Switzerland. Industrial production. Yeah, it doesn't seem like there's a whole lot of major events for Switzerland next week, huh? Seems like most of the move next week on Switzerland comes down to just how it reacts to US dollar. Yeah, you can see the yield spread starting to flip green here for the first time in like 2 weeks, 3 weeks. So we probably top out somewhere in the next 60 pips. Let's see here for the week. Yeah, would not be surprised to see up here. Let's check up timing dots. Yeah, there's a lot of dots up here. It's probably gonna hit an end of week sort of thing like this. Go ahead and put in a timestamp here. Oh yeah, we can put the music back on. Sweet. From what I understand, the S&P doesn't want to do negative rates. A lot of people say they're they're gonna do it anyways. But I think they're gonna try and skirt by that for as long as possible. So this would be my net expectation. We can use a box, like in there. Apply defaults. Yeah, so something like this. Somewhere in here. Let's see. Any... oh, you had inflation on Wednesday. So all of the dots on this particular day come post-inflation. So, you know, if inflation comes out particularly bad to the point where more people in the markets think that the S&P might go negative rates, yeah. That's what all these dots here are for. So this would be, I don't know, anywhere between another 100 to, I don't know, call it 200 or 300 pips, man. Really depends on how this inflation rate for the Swiss franc comes out tomorrow. Or, yeah, on Wednesday. That's technically later today. So, probably be getting an update here really, really soon. Let's see, how is everything moving? So, Aussie and New Zealand are moving a lot. Yen moved 180 pips. Wow. Check that out. It is moving along here. Let's see here. All the yen pairs are getting weaker. That is, the yen is weakening against all of its crosses. It looks like dollar CAD is probably appreciating now at this point. No, not really. You had that initial bump up, but we'll see if it actually holds or not. I mean, looking at the daily, to me it seems like this thing could easily top out today in the next hour or two. And then drift higher, maybe? It's really, really a gamble. Just because it has positive yield spreads just means, hey, there's a positive trend in the yields. And there's a correlation to that. Doesn't necessarily mean it's going to be 100% directionally correct all the time, right? You just take the probabilities. You do what's most likely. Let's fast forward there because I don't like the background chatter. Okay. Let's check out the weekly dots here. Yeah, again, I wouldn't be surprised to see 144, you know, this week, next, I don't know. Let's see. Yeah, in about the next 48 hours, within the next 48 hours, I wouldn't be surprised to see 144. I wouldn't. Lord knows Trump could come out and say something and put us all the way up here. Oh, the talks with Canada and Trudeau aren't going as expected. Just get a little update on the negotiations, right? Let's go ahead and check out the DXY index. Where is this gonna end up? Yeah, it seems like around here is where we're gonna probably end up. Either here or much higher at the end of the week. So kind of two scenarios here on the dollar. The first scenario is up and then down into a close, right? With getting your top around here. The next scenario is with all these things up here, you're just going up and up and up into the end of the week, right? So you got a bump in our distribution here, bump in our distribution here. Either the top comes in here or the top comes in here. This top is just a really bullish end of week. And this top is a reversal into end of week. Sorry if that's not terribly easy for you guys to see. Kind of have a big old fat thing on the side there. Put that guy away. Any other new information here? Traders shift next Fed rate cut to December from September, which is kind of funny because it was just at the last meeting that the odds were shifted from December to September, so now they're going back again. That's why you have to know what the expectations are of traders going into things. Let's see, real quick. Is there any new live streams coming up from the White House? Any live streams scheduled? No. How about we go to the X website? Check out the White House on X. See if they have anything planned. Nope.
Hi, it's Paul Sankey. I've got an independent research.
Kissing ground on American soil again. Yeah. There you go. Very important to follow and stay up to date on what the President of the United States is currently doing. At what point do we hear Donald tweet say he wants a weaker dollar? I mean, at any point, right? That's been his position for a long time. It's just his policies make the US dollar a lot stronger. The best bet we have is the tariffs aren't super significant. If there is inflation, it's transitory. And there is a huge amount of budget relief from activities taken on by the Department of Government Efficiency. So all that stuff Elon Musk is doing, if he, massively reduces the deficit, it'll free up a lot of money. And that would also make the US dollar potentially stronger. However, going into March, there's supposed to be a new fiscal budget for the United States. So cleaning up all this money, going into a new fiscal budget that could potentially be stimulatory, that's kind of the next big thing to watch out for, in my opinion. How stimulatory is the US fiscal budget that gets voted on in March? Now, we're in the middle of February, but I've been kind of paying attention to this like towards like the end of January. It's very important to find out what's going to be in that budget. And there are a few outlooks on that topic, actually. And you can probably find those outlooks here in the Outlooks channel. So you go and let's see here, if we search deficit, let's see. Yeah, you can see here's the 30th of February. This is all talking about deficits with Canada and the United States. And that's Germany. So yeah, not a huge amount here on the US deficit. It's hidden somewhere in these outlooks. Now I have some notes that I have that I can search for the word deficit and see if there's an outlook that has it. But other than that, there's not too much to be concerned about. It's just how stimulatory is that deficit, that fiscal policy. That U.S. fiscal policy, that fiscal budget from the United States going to be in March. How much stuff is getting voted on? If it's very stimulatory, that will weaken the US dollar. But only in conjunction with the tariffs on Mexico and Canada, like, being completely avoided. And there has been no update on that information yet. So until there's an update on that front, we could very easily see higher inflation in the US, at least for a transitory period. And transitory is like 3 to 6 months. If that is the case, dollar is going to be stronger, right? We might only get one. Traders might only say we're getting 0 cuts this year, only 1 cut in December, if that is the case. Otherwise, if we avoid the tariffs, if Mexico and Canada are able to deal with the United States and Trump and come to an agreement and avoid the tariffs, then guess what? It's the news from a very stimulatory US fiscal policy in March. That would be like the key turning point for like, okay, now we're going to start the US dollar like bearish trend from here. We'll probably price in 3 rate cuts a little bit more easily, right? From the Fed. 3 rate cuts from the Fed. Probably starting in summer, September, and then December, right? One of the summer months. I mean, does that sound reasonable to you guys listening? Does that sound reasonable at all? Those conditions for, okay, when might the dollar actually start getting systemically weaker, Again, it'd have to be based on the conditions that, you know, we don't see those tariffs on Canada and Mexico implemented, and then we see a very stimulatory US fiscal budget come in March. So then toward the end of March, I would expect the more weak US dollar regime to come in. Yeah, towards me. Yeah, that's very, very smart. All right, that's right. We actually have it in the notes. We have it in the notes, that's right. Yeah. Until March 4th. And then there's a review. Oh. Yeah, this is why you read your outlooks, man. The US Trading Partner Practices Review comes out April 1st, which could mean tariffs on Europe. So even if there's some weakness in the US sometime in the middle of March, that could very, very easily go away come April, especially for Europe. Yeah, March 4th we could get the tariffs. I mean, that's not that far away. Like, we need to get an update next week on how those negotiations are going. We have to get an update on how the Canada and Mexico negotiations are going. Otherwise, next week, it's, you know, we could very easily be trading way up here. I mean, this week, we could be trading above 144. And then if we don't get an update, we could very easily be trading in the mid to high 145 handle again, which is like way back to up here. If we get no new data, or we get bad news on the negotiations. So you could end up with something like that very, very easily. So I dropped a couple of frames there for a sec. But yeah, you can end up with a move like this very, very easily. Because let's see here, this is the new tariff day. So you have this week and then this week, right? So all the news, all the new information to prepare markets for the tariff event at this vertical blue line come in the 14 days here. So starting here, we need to be on the lookout for any new information on the negotiations. Which actually mean you could do something more along these lines. So 146, if we start getting bad news going into the tariff negotiations, I'd say 146 would be my target. And then past the 4th of March. Past the 4th of March. Oh yeah, and then later in the month, Parliament comes back in Canada. So this whole time, Parliament's still down. Yeah. No, I'd stay long dollar CAD, because again, don't get me wrong, being reversed off, you know, a goodwill 30-day delay and hold, we're going above, like, we are going above 150, especially if Parliament, you know, if Poilievre and the Conservatives do a vote of confidence and Imagine they get Carney in as the new prime minister after the Labour Party, the Liberal Party in Canada, does their votes. And then Carney fails his vote of confidence. I mean, I don't think that'll be very, very likely in all seriousness, because the more left-wing parties in Canada are going to support him. And because of that, Trump is not going to like dealing with Carney as prime minister. Let's just say. Carney is very much a globalist. Carney and Trump would not get along. He would not be a good prime minister to deal with the United States. And so, and arguably Poilievre too. The more I learn, the more I want the premier of Alberta to become the prime minister. And the more I learn about her, the more I want her to be the prime minister, yeah. The way the negotiations around this period here with the tariffs was really, really smart. And would have delayed these tariffs and the threats of these, like, in a much more sane and less volatile, and much more diplomatic manner. Anyways, we're gonna probably end up with a stronger dollar for the rest of this week on all the USD pairs, and we have something to watch and look forward to, especially on that US fiscal policy front. So again, if you guys are new, just watching this, link in the description takes you to the WAP. Join the Discord through the WAP. That's where you can find these outlooks and whatnot. And we have this, a Trump watch thread. Yep. School reruns. No, I'm about to end the stream. Appreciate you hopping in here, Ari and Harold. Absolutely appreciate it. But yeah, you can see. Yeah, there was this zoom in on Trump's face there. This thread has been fantastic. Whenever there's breaking news, anyone who is a part of this thread can post breaking news. And this is a collaborative research thread. So whenever there's new information coming out that's Trump related, anything goes. So Trump tariffs, Trump whatever. They're like, there's a thread for tariffs specifically, sure. But this is a thread for everyone. This Trump watch thread, this is a thread for everyone, where if you have any news, any breaking news, anything at all, you can put it in here without worrying about, like, oh, am I posting in the right spot? If it's Trump related and it's breaking news and potentially market moving, throw it in here. If it's a new executive order, throw it in here. If he's about to go live and give a speech, definitely put that in here. So, I'm always going to promote the Trump Watch thread. Again, link in the description to get access to the indicators, the trading group, and the Discord is free. Is the trading group. You get that with the indicators. Alrighty, you guys. I am off for the day now. I had a very, very, very productive day programming and streaming and doing all this, hanging out with you guys. I will see you all in a bit.